Hi, this is Kieran, your DeFi guide. BTC blasts through the $20,000 price level, and in this video today, I'll be sharing with you some pretty bullish news for Ethereum holders. At the end of the video, I'll be also covering some ETH as well as BTC charts to show you maybe how the price of ETH and BTC might be evolving over the next few weeks. But before that, I'd really like to thank our sponsor, Aave. The money in your bank or under your mattress loses in value the longer you keep it there. That's why you need to meet Aave. Aave is like your bank in the DeFi space, where you can earn high interest rates by lending your crypto in a permissionless savings account. You can also deposit the funds as collateral to buy some more ETH and increase your exposure. With an Ethereum wallet and a few clicks, you can start earning high interest rates on many different cryptocurrencies such as DAI, USDC, TUSD, and many more. Try out the Aave platform by clicking on the link below in the description and start making your money work for you. So with a lot of institutions now realizing the positive benefits of a blockchain, we're actually entering a new phase of blockchain adoption. Now with the decentralized finance space, a lot of financial services and tools are moving away from a centralized system, and this is causing a irreversible shift from centralized to decentralized onto now mostly the Ethereum blockchain, because a lot of retail investors as well as institutions are slowly starting to see and also reap the benefits of earning high interest rates on many DeFi platforms. So if we look at this chart here from a Glassnode, we can actually see at the beginning of March, a lot of BTC has been moving from centralized crypto exchanges onto other either wallets or decentralized finance platforms. Now, the BTC could actually be moving onto platforms that are wrapping Bitcoin in order to have these wrapped Bitcoins deployed and used in DeFi apps. And the ETH is also probably locked in many DeFi apps or in the new staking option for the Ethereum 2.0 blockchain. One massive shift that paints a really bullish picture is the market capitalization of BTC on Ethereum. So if you're not already aware of it, you can actually lock up BTC on different platforms like RenBTC, and you can wrap it so that these ERC20 tokens backed one by BTC can be used on DeFi platforms. Now this BTC is being sucked like from a black hole into the DeFi space. You can see here the market capitalization of BTC on Ethereum is now 150,000 BTC. You've got here the different types of wrapped BTC that is on Ethereum. We've got SBTC supply, HBTC, PBTC, the famous wrapped BTC, RenBTC, and two other ones. You've also got the trading volume of BTC on Ethereum. So not only is Bitcoin being traded on the Bitcoin blockchain, but it's also being traded on the Ethereum blockchain. And here are the different platforms. So most of them is when people are actually sending the Bitcoin there and wrapping it, but also people maybe locking up this Bitcoin on different platforms such as token sets to create token baskets or other liquidity pools in order to earn trading fees. So there are many different possibilities, and Ethereum actually allows people with Bitcoin to explore the wide variety of DeFi apps and benefit from the high interest rates, which is unfortunately not possible if you just hold Bitcoin. There are some centralized exchanges that do offer some interest rates, but not your keys, not your coins. What I also think is a pretty bullish but hidden sign is the flight to quality of developers moving from less popular blockchains or systems and moving to Ethereum. So if we look at the increase of developers on the Ethereum blockchain, there's 80% of all active developers today came in the last 2 years. So there's definitely been a massive flight to quality, meaning high quality ecosystems are growing while others are shrinking. That's why many Ethereum killer blockchains are actually losing in value as developers are running away from the platforms, and they see that those blockchains don't actually have any future. The last time new crypto developers increased for more than 3 months was December 2017 at peak Bitcoin prices, when new monthly developers grew 15% since the start of 2020. I'm going to hope to see this amount of new developers coming to the Ethereum blockchain increase massively in 2021, especially as soon as the Ethereum 2.0 blockchain comes to an end with the massive scalability and lower fee benefits that it will bring, it will also attract a lot of developers who will want to reap the benefits of such a fast growing space. The growth of the Grayscale Ethereum Trust has been incredibly impressive in 2020. In January, they actually only had 0.5 million ETH. And now the holdings of the trust are approaching 3 million ETH, and it doesn't look like they're actually stopping trying to accumulate their ETH. So Grayscale is the black hole of the institutions, devouring as much ETH as they can get their hands upon. So at the moment, their ETH sits at 2.5% of the total circulating supply of ETH. In my opinion, Ethereum is considered an underdog in the cryptocurrency space. Now, of course, it's still at the second position in terms of market capitalization, but I'm looking at it more from a perspective of institutional investors. At the moment, Bitcoin is the name on the streets. A lot of massive institutions, fund managements are eyeing Bitcoin as that's possibly one of the most known assets and one of the assets that is just garnering all of the attention. Some people see this as exciting, some people are a bit wary about futures, but the news is CME Group to launch Ethereum futures product. Now Ethereum prices might be impacted by that, as the price of Bitcoin is definitely impacted by the Bitcoin futures. But the last time and when Bitcoin futures were actually launched, Bitcoin experienced a massive price rally. So hopefully the same thing will happen with Ethereum. I also found an interesting article that brings to you a metric to rank different decentralized finance companies. And this is the price to sales ratio, PNS, brought to you by Token Terminal. So the price to sales ratio compares a protocol's market cap to its revenues. A low ratio could imply that the protocol is undervalued and vice versa. And I think this is really interesting, especially if you're looking for some gems in the cryptocurrency space and you find a project, a company, or a DeFi application that is got unproportionally high returns, so they generate a lot of fees but a super low market cap, so that can actually maybe indicate a massive growth in terms of a price in the near future. This is a very interesting tool to use because it can sort out protocols with meaningful usage relative to their market cap. Here you can see some top dApps ranked by price to sales ratio. So you've got Synthetics, Aave, Ren, Balancer, and these ones here, the top three, MakerDAO, Uniswap, and SushiSwap, which have pretty low ratios because their market cap is pretty low compared to the amount of revenues that they bring. Last but not least, let's look at the ETH USD charts. So we actually managed to break above the cloud. So a few months ago in June, I actually mentioned entering this cloud was actually super bullish because very often what happens, we get an edge-to-edge trade, and this is something that actually happened from June to actually now December. We did an edge-to-edge trade, and now we're actually trading at $622. So what is also super interesting is that we have to stay above the $612 range, and if we do that, this is pretty bullish, and we'll possibly see in the next few weeks touch of the next highest resistance, which is $741, and that would be fantastic. It would be incredibly fantastic if we manage to touch these price levels before the end of the year, but it is also possible that this happens in January. Now, in my opinion, you always have to be careful in credit, especially during massive price rallies. Don't go all in here. Just dollar cost average based on some popular support levels. So at the moment, the popular support level would be the $589 range, and it's possible that we retest that before we actually go higher. Then the next popular support level will be the $452 range. So maybe think about adding to your position at those two ranges. Now it's possible that we don't even touch that and we go even higher, and then $743 would be our next target. Now, what is incredibly important during these broad rallies is that at some point you have to think about taking profit. So make sure you check out how to take profit video that I made a few months ago, which is super important because you don't want to really enter this massive bull run and exit it without taking any profits at the end. So taking profits is super important, but you have to understand how to do it without afterwards having FOMO because the price goes way higher and you've sold. So there's a definite strategy to how to take profit. Now let's look at BTC, and yeah, BTC is actually looking very bullish because we broke above the 20,000 US dollar range. The last time we actually came close to that was on the 17th, actually 11th, 17th of December 2017. We were only there for 2 weeks, and now we've actually been above the 18,000 US dollar range for a longer period of time than in 2017. So this is definitely bullish. But what is more bullish is that we broke above this 20,000 US dollar range. Now what I'd really like to see, especially on the weekly candle, is to have a weekly close above this 20,000 US dollar price level. But what would also be nice is if we can have some bounces off of this 20,000 US dollar level, and this can become our new 10,000 US dollar range. And from there, the sky is the limit. If we look at the previous time that we actually went to the next all-time high, so what that means is now we actually reached the previous all-time high of 2017, but the last time that happened, where we actually reached the previous all-time high of 1,400 US dollars, after that happened, so we actually reached the 1,300 or 400 US dollar range sometime in March 2017, and after that the price increase was of 127%. Now if we should expect such a price increase after breaking above this 20,000 US dollar level, then that will bring us to around 44,000 or 45,000 US dollars. Now I don't believe we're going to manage to do that in one straight take. It's possible that it goes a little bit sideways, and then we're going to see a spike above the same way as we saw in 2017. So that was it for today's video. Hope you enjoyed it. If you liked it, leave a like. Make sure to subscribe if you're new to the channel, and I'll catch you in the next video. Have a good one. Bye-bye.